Targets. Peter Churchhouse joins Emily Oriel and me on the show, author of the Churchhouse Letter, to talk about home prices in China and whatever else might jump to mind. Morning, sir.
Good morning.
You can't have 30% increases in home prices without some crazy panic reaction from municipal or national authorities in China. You've already seen it in some places.
Well, that's exactly right. And we're seeing, as Emily's just mentioned, an imposition of restrictions. You've got to bear in mind that China's housing market is now in the second bubble since the onset of the GFC in 2008. Also have to bear in mind that housing is a very central part of economic policy and fiscal policy in China. They keep putting the foot on the gas pedal, they put it on the brake pedal. It's been on the gas pedal, it's now going on the brake pedal again. So that's the kind of reality we face here. And as you pointed out, some of these price increases are horrendous that we've seen. But bear in mind, it is a two-speed and a two-tier market. For example, some of the tier 3 and tier 4 cities are still struggling with oversupply and prices still struggling to gain momentum. But the tier 1s and tier 2s are doing extremely well, as you've just mentioned.
Peter, it's Oriel here in Singapore. Now, I know that, when we spoke to you back in June, you made a very salient point that, the price rises that we're seeing in China does actually reflect real demand. Is that still the case now? Because, when you talk about a bubble, that brings up, well, connotations of a bubble bursting, I suppose. So is this real demand? Is this going to be sustainable going forward?
Well, certainly there is a great deal of actual investment in property in China. A survey I just saw recently by one of the investment banks of buyers in China suggested that about 25 to 30% of buyers are buying for investment. They're not intending to occupy the properties. They're buying to either hold for capital gain or to hold for rental purposes. Now, that's a pretty high percentage. But having said that, the genuine demand still is pretty strong. You're still seeing something in the order of a 53% increase in mortgage financing, which has come down from what it was in the early part of the year. But there is still very strong, genuine demand. And when we think over the next 10 years, you're going to see about 130 or 150 million people move from the rural areas into the cities. You can understand that there will be a continuing, genuine demand over that period. But that for the time being, we're in a short-term property bubble, no question.
Peter, can you react to some of the comments coming out from the Statistics Bureau? They're saying that property prices in China's first and second tier cities apparently cooled in October, and in third tier cities remained relatively stable. Are the property cooling measures that they've imposed working?
Yes, on the supply side, we're definitely seeing that happening. We're definitely seeing a cooling in the supply side of the China property market. For example, land sales are down by 38%. Construction starts are growing at half the rate that they were at the beginning of the year. So those kind of statistics are showing a cooling, but from the demand side, only just starting. So the supply side has been cooling for much of this year. The demand side is going to start cooling, I would say, from here on.
Okay, but Peter, let me bring it back. Let me pull it back from the huge motherland to our Hong Kong part of China. Actually, we actually treat Hong Kong as part of China, unlike those two that were in Ledgekill.
We all do.
Yeah. Do you buy this? The market is treating property like it's no-go zone right now. I mean, people are starting to freak out. Like we're going to get back to like 1997. Mortgage level rates. Remember when we were paying 10.5%, 11% interest? I mean, the way the Fed is going, mortgage rates are going to be 3%. Yeah. Yeah. I mean, why do people overreact like this?
There are two factors, I think, in the Hong Kong market right now. There's a double whammy effect. Firstly, post-Trump election, increased fears of interest rate hikes, and now Janet Yellen's signaling December for the next hike. But the reality is, are we going to get back to 9% mortgage rates anytime soon? I don't think so. So there is a bit of an overreaction on interest rates here. The other double whammy effect has been this extra stamp duty that the government imposed in October. Yeah. That means that if you and I go out and buy a residential property today, we pay $100 for the property, we're going to pay another $30 for the stamp duties.
Right.
So that's outrageous. That is something we don't see anywhere else in the world.
Right.
So that, of course, was creating a little bit of a concern in the property market in the short term.
Okay. Emily actually found a loophole. If you give me all your money and I buy like 10 units all at once in my name, I actually have a lower stamp duty. I think that's what you
Yeah,
found.
there's one guy that was able to do that, bought 4 apartments at once, didn't have to pay anything.
That's right. And if you buy in a company, it's less. If you buy a BVI company, for example, and also if you get divorced.
Oh, there's many loopholes.
Wow.
The Chinese are doing that full time.
All right. Peter, thanks for joining us, okay?
Great.
All
Good to
right.
see you.
Loopholes are us. Peter Churchhouse, author of the Churchhouse Letter, with us on the show. Okay. Well, this news crossing the tape as we